I think that's the part that no one really talks about, right? It's like you can make a lot of money. You're making a lot of money because you're taking on a lot of risk. The result is there are going to be bad apples. Like you will lose. My Ajax property, man, I'm probably the only person that bought a property in 2017. I sold it in, I think it was 2020, and I made a total of $3,000.
How?
Right?
Is that the one where the guy wasn't paying the rent?
Yeah, he wasn't paying rent. I overpaid when I bought it. I sold it in the middle of COVID. But then I looked at it, I'm like, okay, like I still have like my down payment in here, and like knowing what I know today, would I own this asset? No, right? So then I was like, can I take that? And so I actually sold that, and I used that money, I think, to buy my 9plex in Kirkland Lake, right? So it's kind of like, okay, like where's my money ultimately better spent, right? But like that being said, I'd consider that a L, right? Because I wasted so much fucking money and time on that property, and I made what, $3,000 on it. That's probably
so
not
you're dishing out the monthly payments on this like this whole time.
No. So he left 2019 June. Completely trashed the place. Stories I could tell you guys are ridiculous, right? Like he left. So he stopped paying rent 2018, I think September. When I also got laid off 2018 September. He probably stopped paying rent September, October, something like that, right? And then he left 2019 June, and I got married 2019 July. And in between my wedding and my reception, I was in this house trying to paint it myself because I had no money to fucking pay a painter, right? And this was like boiling hot in July, and the AC wasn't working. I'm inside this house, and it's like fucking drenched. And I kid you not, I stripped down to my boxers, and I'm fucking painting. And I'm like, what is my life?
Thank you guys for tuning in for another episode of Wealth is Possible. On today's show, we are talking with Mayu, who's a real estate investor, CPA and mortgage broker. So he owns approximately 50 units in his portfolio and has been investing in real estate since 2015. As a mortgage broker, he's completed over 100 transactions in 2022. And he's also one of the hosts of the Rise Real Estate Investing podcast and has helped hundreds of investors build and scale their own real estate portfolios to 7- and 8-figure values.
Damn, probably couldn't have said it better myself, man.
Yeah, bro. What are you saying, bro?
Nothing much, man. Nothing much. Thanks for having me out here, guys. I know we're late on a Sunday here, but it should be a good conversation, right?
Yeah, we're Markham right now, so we're in the new spot. Glad to
episode 22.
Is episode 22?
Is episode 22? Holy shit! Honestly, that's what we started off with. Once every 2 weeks is sustainable. Once we went to once every week, we started to like run out of bank. Like you bank a couple episodes so that you can take some time off here and there.
Yeah, we're like 4 episodes ahead right now.
Yeah, we run out of bank all the time. Like right now, we're out of bank. So every episode we shoot, we just basically release it that week. So hard to get ahead of it.
So you don't drop it like consistently anymore, or like?
We do. We try to do once every week. But we basically record up until we recorded a massive amount of episodes up until the end of June. And then in July, like shit happens, and like August, like shit happens. So you don't record as much as you should, right? And then the summer happened, and you just start. So the last like I think 2 weeks we took off, right? And then we've been just banking up again now and trying to get ahead of it, right? So
okay.
Yeah, that's the podcast life, but I'm sure you guys know.
Yeah. You know what's crazy, yo? When you sign up for it, you never even take in how hectic it is.
No one understands. Honestly, unless you do another podcast or you do content yourself, no one understands how the shit that happens behind the scenes, right?
It seems so simple when it comes out. Everyone's like, oh,
just get a mic.
Just get a mic, plug it in, and and everything else magically appears on, right?
So for anyone who doesn't know you, tell us your story, how you got into real estate, and why you got into real estate.
It depends how far back you go, right? Like if you're talking about a passion in real estate, when we first came here, grew up in Tuxedo Court for a little while, right?
Jeez.
So. But we left to Markham. Like it's no like real like struggle story or anything, you know? But like we left to Markham when we were in grade 3. But like the result is you still drive back and forth a lot, right? And you look up at these towers that you grew up in for a pretty memorable part of your life, and you go, at a pretty young age, I was already like, who the fuck owns this shit? Like it's pretty fascinating, right? Like you've got these massive towers all across the place. My mom used to work at Mark Minnell's, where there was like a little like office complex there, right? And she would tell me how like it was like multi-generational like family that owned it for a couple like generations now, right? So it's just like shit. Like you start to be like pretty fascinated by that stuff, right? So early age, decide I want to go into business. Traditional Tamil household, you tell your parents you want to go into business. They say, okay, do accounting. I'm like, okay, cool. So went into accounting, went to Laurier, graduated, did my CA, all that kind of shit. And I did a co-op term. The benefit is you get to try out different careers. So I kind of messed up where I stayed with the same company the entire time, but the result is you're earning like decent money in university, right? So you do 4 months on, and during those 4 months you earn about like 10 to 12 grand. You save that, you go back to school, you blow that money, right, through tuition, living costs, just food and stupid stuff, right? And then you just go back and you repeat the cycle. So you graduate pretty low debt, right? Like you don't really have a lot of debt, which definitely helps. But then went on to get my CA and stuff. But early on, I kind of realized that I wasn't too keen about like the corporate world. Was into this real estate stuff.
Did you work in corporate for any time?
Yeah, I worked in corporate up until 2020.
Okay. Shit. Okay. What were you doing?
No, 2021 May.
Yeah.
2021
May.
May,
Okay.
I quit my
So literally
job.
last year.
Yeah. It was quite the journey, man. So that was about like 6 years, right? We take this all the way back, right? So 2015, bought my first property, right?
Yeah.
At that point, knew nothing about real estate, right? I just knew I wanted to buy real estate.
How old were you?
I was 23, 24, something like that, right?
Okay. Pretty young.
Pretty young, basically right out of school. I started working in January,
Yeah.
and they gave us some signing bonuses and some other shit, right? So and I worked for like 4 months or so, and I'd accumulated some capital from before. Not too significant. I basically had like 10, 15 grand money.
Yeah.
And so in the summer, in the CA journey, you have this one opportunity in your lifetime to take 4 months off and just study for an exam.
Yeah.
No one needs 4 months to study for an exam, right? But
Yeah.
I was like, you know what? Last opportunity. I'm going to take the 4 months off. I'm going to chill the fuck out. I'm just going to like, and then I'll start studying in like July, August or something like that. So basically May, June, all I did was go around and look at houses. I have no idea why. I had another buddy that was for whatever reason equally as lifeless and equally as interested in like real estate as me, and we just went around and looked at a lot of like pre-con. We looked at houses that were on the market. We just looked at a bunch of shit, and my dad just went, yo, like, you're wasting so much time looking at houses, just buy something. I'm like, oh, I don't really have money. And he's like, look, like buy a pre-con. He didn't say which one. He just buy whatever pre-con you want. If you need money, you can dip into my unsecured line of credit. He just had an unsecured line of credit. He's like, you're going to have to pay it off. He's like, I don't have money to pay the shit off, right? But if you need money, you can dip into this, pull it out and give it to your deposit, right? And then pay me back, right? So that's basically what I did.
Yeah.
I had 10, 15 grand, which gets me the first deposit done. And then it was, I think every like 60 or 90 days or something like that, right? Was like the next deposit, right? So you just keep dipping into the line of credit. The result is like you're forced to be, it's kind of like a savings vehicle. Right? You have no other option other than to pay off your next deposit.
You already started it.
Exactly. You're deep, right? Like at this point, there's no other game plan, right? So that took me about like 2 years maybe to pay off that first one. At the time that I bought that pre-con, now my wife, back then girlfriend, she bought another pre-con, right? And then 2017 or something like that, I bought a second property out in Ajax. That once again dipping into like all sorts of lines of credit and like stuff like that, right? So I was definitely like taking advantage of a lot of like unsecured lines of credit, taking on a shit ton of debt. But it's not like I grew like a massive portfolio. At that time, my girlfriend had one property. I had the one pre-con, and then I had the property in Ajax. That was 2017, right? So then 2018, I'm like, okay, like still not really thinking much about real estate. It's just kind of there. You just invest your money, right? Like that's it. It's kind of like a byproduct. 2018, I switched into a management consulting shop. So I was at EY in like the audit capacity for quite some time. 2018, I switched, and audit by all means, like it's a fucking grind. Like for at least like 6 months of the year, you're working like 70, 80 hours a week, right? So like this is kind of bullshit. For the amount of money you get paid, not really worth it, right? So management consulting was kind of this sexy thing, right? So switched into a boutique consulting shop in 2018. Really small shop, probably had about like 10 or 20 employees, right? And I switched jobs, more so for the job than it was the pay. But then I get there and they have no work, right? So for the first month, it's kind of dope, right? You're just sitting around getting paid, doing nothing, right?
You have the title too.
Yeah, you have the title, Second month comes around and you're like, this is getting kind of boring. What the hell am I doing here? Third month comes around, they give me like 1 like 2 week gig. Fourth month comes around and I get let go, right? So then at this point, I'm like, fuck this shit. I'm never going to be subject to something, like, because they hired me thinking that they would have work and then they didn't have work and then ultimately you get let go.
Essentially, they laid you off.
You get fired. Laid off, right? So that was 2018. And all of this stuff was happening as I was supposed to get married. I did get married 2019 June, right?
Congrats.
So like, well, that's a couple years
ago. But still, I don't know you back then. So
congrats. But I mean, you get laid off and you're supposed to get married in 6 months. And my Ajax property tenant stopped paying me rent.
Oh shit.
Right?
Okay.
So you're kind of in this little back against the wall kind of moment, right? And you're just like, it's a really shitty feeling to just be so dependent on someone else for your paycheck. Right? So at that point in 2018, I went back to EY. So I had a good relationship there. It was very easy. They just hired me back, right? But I went back, but I was like, okay, I'm gonna start working to get myself out of this shit. Right? Because I don't want to be dependent on someone else for my financial stability. Right? And the worst part about this, like really what helped motivate me was I looked around and like a lot of the people that I'd worked with, they knew coding, they knew all these like techie things. Okay. I'm like, I do real estate, the most backwards thing, the most basic thing since time, right? Like people have done real estate. I'm like, I know nothing about this shit. And if I'm at that, I guess I was like 27 or something, right? So if I'm 27 and I know nothing about this shit, when I'm 50, I'm going to know even less. This is the reality of it, right? And I had like my dad's an accountant and a couple of his friends, they're like 60 years old, right? You get laid off. You can't find another job. You're competing with like 25-year-olds. So I'm like, that's going to be me, right? So I don't want to get there. So that was 2018. Went back to UI, and then starting 2019, basically, I remember being laid off at home and watching YouTube and watching about this real estate stuff. And I was like, okay, kind of skeptical, right? So you go back to work. Then 2019, I'm like, you know what? I'm just going to take a shot at this real estate. Like actually like executing on some of the stuff that I just learned about on YouTube. I'm like, let me take a shot at it. So in 2018, we sold off my wife's property and basically convinced my wife to just let me use that money, right? And it was supposed to be for the wedding. I'm like, no, don't worry about the wedding. Like we'll figure that out, right?
Yeah.
So
I got bigger plans, you know?
Yeah. It worked out. And she'll never admit it now, but I mean, she'll admit it now. But back then she was like, you're fucking crazy, right? So 2019, we bought a house at Vic Park and Ellesmere.
Okay.
Right?
Okay.
I think it was 2018 or 19. Like all these kind of timelines are a little bit up in the air.
Was it a pre-con as well, or was
no? This was like a pre-existing bungalow that we bought for, I think it was like $670 or something like that.
Was it like turnkey, or was it something that
it was
like
just like unrenovated, right?
Unrenovated.
Like,
okay.
The hardwood floors are like this big, right? like one of those. The kitchen is kind of run down, right? Like it's not like a hoarder house or anything like that, but it was just like it needed renovation.
Yeah,
right?
like lipstick stuff.
Yeah. So bought that for about $670. Got some guys to come in. We probably spent like $45K. It wasn't a crazy amount.
Yeah.
I think they charged me like $30,000 to build out the basement. So 2019 versus like renovations now, like we're talking like two completely different like things, right? Like that same renovation today would cost like $50,000-$60,000, right?
Yeah.
But spent $30,000 in the basement. Spent about like $10,000-$15,000 upstairs. I think we closed it like February, March, and then we refinanced it in like July or something like that. So I don't know if everyone's familiar with like a BRRRR, right? Like I feel like it's super like out there on real estate and social media now, but at that time it was kind of like very few people were talking about it at that time, right?
Only people watch like Bigger Pockets and shit knew that.
Yeah, Bigger Pockets. Yeah, and you think it's like just in the US or like in like these small cities in like London, like, you know, like stuff like that, the McKeever group, right?
Yeah.
You know, there were people doing it, right? I wanted to try it out in Toronto. I did it in Toronto. I think at that point I was all in on that one house, like almost like $200K.
Yeah.
Right. Because we had sold off that pre-con, which is how we funded this one. Right. Because the down payment on about $670, round up, it's about $140K at 20% down payment on about $670. Right. And then you spend another 60-ish, 40 to 60, right? Holding costs, whatever. So you're all in it for like $200,000. So I refinanced. We pulled out about 120. Right. Which is great in theory. Right. Because the house was now worth about $80,000. We bought it for $670. We spent 40 on it. We're in it for $710. It's now worth $800. So you pulled out some variation of these kind of numbers. Right. So it's great. The concept works in theory. The problem is you still leave $80,000 in the property, right? So I'm like, okay, I could probably do this one more time, and then I'm out of capital, right? I probably won't be able to repeat it after that. And at this point, we'd gotten married actually. So we'd kind of structured our finances in a way that my wife pays for all of our mandatory fixed costs, like housing related stuff. All of my income would go into kind of this discretionary investing fund, right? Where we just kind of, and then the only other thing I was responsible was to pay for my car and to pay for any travel that we do, right? So it's not bad. So then I just looked at, okay, how much was it getting paid? At that point, I feel like my salary was about like 90 or 100 grand or something like that, right? So what that really means is every month you bring in like 5 grand, right? So at that point I went, okay, so if a normal BRRRR project takes me about, I think it was like 6 months, right? Or something like that is what it would take me. So I'm like, over the course of 6 months, if I can save 5 grand every single month, that's 30K that I'll save up, right? So I went, I just have to find a market where my net investment is lower than 30K. Because it doesn't work for Toronto, because Toronto net investment was at 80 grand, right? Yeah. So then I went to Windsor, and I actually went to a couple like networking events, and people found it cool that I had a couple properties in GTA. Yeah. I found it cool that they were doing all the shit in Windsor. Right? So I'm like, there's something.
This is 2019?
This was, 2019.
Okay.
Yeah.
That's fairly recent, bro.
Yeah. No, so up until 2019, man, I didn't know shit. I was just investing like pre-con, just doing stupid shit for the sake of it, right?
The Tamil investment.
Yeah, the Tamil investment side, right? Which is honestly nothing wrong with it. So many people many people have made a boatload of money.
Yeah, facts,
right? But it's not the route to get to, I think, financial independence at a rapid pace, right?
Yeah, we'll talk about FIRE later.
Yeah. FIRE is great. FIRE is dope, man. Yeah. I think there's stages to whatever.
Yeah. FIRE is fire, you know.
So 2019, started doing Windsor, and at that point, we did one project, and I think my net investment was 5 grand. Right? Okay. I was like, okay, concept proven. This shit is fucking dope. How do I scale up as fast as possible, right? So then the limiting factor isn't really capital. I mean, it is, right? Because you only have so many dollars in your own bank account, right? But the other part of the hurdle is the mortgage process, right? So then you start realizing, okay, I got to bring in more people into my deals. That's the only way that I can start buying properties on different people's names, because otherwise the bank is going, how is this even possible? How are you buying 3 properties, for example, right? Versus if I buy one in my name, one on your name, one on your name, no questions asked, right? As long as everyone can kind of qualify for the mortgages on their own, and it allows me to do 3 projects at the same time, right? The result is you get buying power as a result of that. A couple times we've ordered like on bulk, like just like flooring. Right. If you have like 3-4 projects on the go, you can order like a little skid of flooring this big, right? And you can just store it in one of your properties and you can kind of disperse it as you need to, right? Same thing with contractors. You get a lot of, like, we basically had in Windsor contractor that just kind of like just worked for us like all the time, right? And he would just be like, okay, where are we going next? Where are we going next, right? Eventually that became a bottleneck, right? As it does, right? But the Windsor model was great. There was a lot of cash flow there. You're building a lot of equity because when you buy a house for like 200, you spend 40 on it, and now it's worth like 300 or whatever, right? That's an immediate like 60 grand in your pocket, like in terms of the wealth that you're building, right?
Yeah.
So the Windsor stuff was great and I was doing the social media stuff at this point. So I had a lot of partners that were like interested in doing stuff together. They saw the numbers. It made a lot of sense. Ultimately, like it was a joint venture model, right? And so your JV partners are really providing you with like an interest-free loan for about like 6 months while you do the project, and then you return to them most of their capital as long as everyone's good with the numbers, and you just kind of carry on just owning that property out into the next like 4 or 5 years, right? So Windsor was great. Then the numbers stopped making a lot of sense, right? And somewhere along this point, we had hit 2020, right? And COVID happened, right? And that's really when I doubled down in Windsor, and I basically did Windsor up until I think it was December. I think November I bought my last property in Windsor, November 2020, right?
Why did you pick Windsor specifically?
Honestly, man, the numbers worked. The net investment was great, right? And then after the numbers worked is when I looked into the city, and I was like, look, this is university town, this is hospital town, it's a border town. I like areas that are landlocked by water, right? So that's great. And ultimately, just super suppressed real estate prices. And the real estate there, if you go to Pickering, you're not going to find a whole lot of properties that haven't been touched over like 25 years, right? Oddly, you still find it in Scarborough, right? Same thing with Markham. You're not going to find a crazy amount of properties that aren't touched, right? Yeah. Windsor, because the real estate prices were so low, it didn't make sense to renovate a lot of these properties for so long, right? Like these single family houses used to be like 70 grand, right? So imagine spending like 25, 30K renovating a 70K house. It makes zero sense, right? But now that the house values had gone up to like 150, 200 grand, you could spend the 20, 30K. Right now, if you spend the 70, 80K, which people will spend on a house in Markham, if you spend that kind of money in Windsor, you're fucked because your value is not going up that high, right? So the type of renovations that you do has to change based on the market that you're in as well, right? So anyways, so Windsor up until November 2020, and then the prices start to get a little too high where the cash flow starts eroding, right? And then at that point, I don't know how many like properties and stuff we had, right? But it was a bunch of properties, but like just various asset classes, and I wanted to jump into the larger multifamily space, right? The problem with the larger multifamily space in Ontario is you've got a lot of red tape that without getting like too political, right? Like that the LTB kind of puts into place that impacts our ability as investors to execute on a plan confidently, right? And so there's a lot of risk on just your ability to even execute on that plan. Yeah. Right. So the result is you start looking for more landlord-friendly states, right? Or provinces, right? And the reason these provinces are landlord friendly is because they want to attract investment dollars. Yeah. Right. Yeah. So New Brunswick is notorious for it, right? Or was, right? And they've got really old real estate, right? And they've got great landlord rules, right? You can increase rents, you can remove tenants immediately, like within a month. Like if a tenant doesn't pay rent, they're gone, right? So jumped into New Brunswick. I was actually with another JV, like he JV'd with me in Windsor, and then we were both looking at New Brunswick, and we said, you know what, we'll just do it together, both be active and just kind of jump at things, right? So we bought a 7 and an 8-plex in New Brunswick.
Was it the first time you invested in multifamily? Like, was it just straight up in New Brunswick?
Yeah, exactly.
Okay.
So for anyone that doesn't know, like multifamily real estate, it's very much valued like a business, right? So it's what is the net income that this business / property can generate, right? And that directly impacts the value of the property, right? The problem in Ontario is if you can't increase the revenue, then your only play is to be able to decrease the expenses on that property, right? And you can increase the revenue, right? But there's no guarantee that you can increase the revenue, which is part of the investment problem there, right?
And that results in a shitty building.
Because like why would a landlord want to maintain a property and stuff if they can't generate a profit from it, right? Yeah. But no, it's also like when you're buying a property, your immediate question has to be, how am I going to remove my capital from this property, right? For that to happen, you need to be able to increase the revenue in most scenarios, unless there's like an oil furnace or like some sort of like obvious way to like reduce like the expenses, right? For the most part, people want to increase the revenue. The problem with increasing the revenue is in Ontario, you can't really remove tenants, right? If someone doesn't pay you rent, that's your best situation, right? Because at least you know that person's getting out within like a year. If that individual keeps paying you rent, you're stuck with them, right? And it's happened to me on like some of my single family houses where like we want to execute on the strategy, and so we buy the property, and then the tenant's just not willing to leave under any circumstances, right? And that kind of jeopardizes the entire thing. So went to New Brunswick, did a burn on those apartment buildings, that was really good. And then bought something up north that was just like a really good price, right? And then
what price are we talking about?
Well, up north I bought a 9-plex in Kirkland Lake for about like 300 grand, right? Shit. So that was like, it was like a multifamily, but like for, and I told myself I wasn't going to do multifamily in Ontario, but if you can buy a 9plex with 300K, you're gonna buy it.
Yeah,
right.
Like,
fuck, why not, right? So and
how much rent would it be like per unit?
So when I bought it, I think it was about 700 to 800 per unit in rents, right?
Okay.
3 of the units are vacant. And we actually are in the process of now re-renting those 3 units after like renovating and stuff like that, right? Targeted rents are about like $1,000 a month.
Shit,
right?
So you can actually cash flow pretty heavy out there too.
Yeah, for sure. But Kirkland Lake, keep in mind, like there's a risk in every investment, right? And if you're getting any kind of return, it's just the only question becomes, what's the risk return, right? Like what's my return? Is it worth the level of risk that I'm taking, right? So Kirkland Lake is a gold mining town, right? So I'm not really recommending it to a lot of people. For me, it was different. Like I think I already had like 45, 50 units or something like that at this point, right? Or maybe it was like 40, right? So adding this one property that had a little bit more risk was fine because it was kind of mitigated by the overall strength of the portfolio, right? Yeah. So and ultimately it's 300K, right? So when you think about it, that property value, we haven't actually refinanced it. I actually kept it with private money the entire way because I'm like, even with 6 of the units rented or something like that, I was generating about like 4,500 or something like that, right? And I'm like, it services the private money, so like I wasn't really in a rush, right? To take my sweet old time with that. And then the mortgage business, as I'm sure you guys all know, like the real estate market when it was like popping off, like that's ultimately where my time was better spent anyways.
Of course,
right?
Of course.
And then I guess I completely forgot, but like I guess like along the way I started flipping real estate as well, right? So I was doing that like more proactively, and that was lucrative as well, right? So that's kind of you kind of spend your time where it was better suited. And then near the end of 2021, we found a business to buy up north, right? So I was in the process of trying to buy that business. Ultimately, the entire thing fell apart. We lost a shit ton of money, right? I think that's the part that no one really talks about, right? It's like you can make a lot of money. You're making a lot of money because you're taking on a lot of risk. The result is there are going to be bad apples. Like you will lose. My Ajax property, man, I'm probably the only person that bought a property in 2017. I sold it in, I think it was 2020, right? And I made a total of $3,000.
How?
Right?
Is that the one where the guy wasn't paying the rent?
Yeah, he wasn't paying rent. I overpaid when I bought it. I sold it in the middle of COVID, right? But then I looked at it, I'm like, okay, like I still have like my down payment in here, and like knowing what I know today, would I own this asset? No, right? So then I was like, can I take that? And so I actually sold that, and I used that money, I think, to buy my 9plex in Kirkland Lake, right? So it's kind of like, okay, like where's my money ultimately better spent, right? But like that being said, I'd consider that a L, right? Because I wasted so much fucking money and time on that property, and I made what, $3,000 on it. That's probably
so not you're dishing out the monthly payments on this like this whole time.
No. So he left 2019 June. Completely trashed the place. Man, like, yeah, the stories I could tell you guys are ridiculous, right? Like he left. So he stopped paying rent 2018, I think September. When I also got laid off 2018 September. He probably stopped paying rent September, October, something like that, right? And then he left 2019 June, and I got married 2019 July. And in between my wedding and my reception, I was in this house trying to paint it myself because I had no money to fucking pay a painter, right? And this was like boiling hot in July, and the AC wasn't working. I'm inside this house, and it's like fucking drenched. And I kid you not, I stripped down to my boxers, and I'm fucking painting. And I'm like, what is my life? Like, is this shit worth it, right? But ultimately,
and you're stressed about the wedding, right?
Yeah. And I got like family home and like family at like my in-laws house, and they're like, hey, like where are you?
They go, where's Mayu? Oh, he's painting, right?
It's just like, and they're just like eventually like my parents and like my in-laws, everyone's just kind of like, I don't even know what Mayu does anymore, right? So that's my life journey, man. Yeah. That's a really I don't even remember the initial question, but I think
I don't either.
Right? How you got into real estate?
We're good. So it was kind of like just like an evolution of like achieving financial independence, right? And then now
you're full time in real estate, right? Or
so I do mortgages full time, right? So along the way, I think there's stages to wealth, right? Name of the podcast, right? So I think early on you just gotta scrape together whatever capital you can to invest whatever you can, build it up, have a track record, learn on your own dollar, right? And then you go, okay, I'm doing this shit pretty well. How do I do more, right? Like how do I amplify my results, right? So you gotta start leveraging other people's capital, other people's resources, right, to do the same thing. It's the same whether you have a business that's, I don't know, call it like you have a convenience store, and for whatever reason you're really good at your convenience store. Maybe it's not the best example, right? But if you're really good at this one convenience store and you've kind of broken the model and you've figured out this trade secrets behind it, sure, you could save up your capital and buy one more convenience store.
And then scale.
Right? You could do that. What you do the other or one. Now you've mastered this. Maybe you bring in 10 people, and within the next year you buy 10 convenience stores. Right? And now you're ready to kind of like amplify it. Right? And then, but part of that process, if you bought the 10 convenience stores after a year, 2 years, right? If you're diligent, you should be able to buy out your 10 partners.
Yeah.
Right. And now you solely own again the 10 properties. Right.
We want to thank Betstamp for sponsoring this video. Betstamp's free app gives you guys the ability to line shop for the most valuable odds on each bet that you place. If you're already on these sportsbooks placing bets, then this is a no-brainer. Take advantage of the Betstamp app, which integrates multiple sportsbooks and gives you guys access to the best prices so you can maximize your profits. The only way to get an edge on online sports betting is by having multiple accounts at different sportsbooks. Sign up for free using our promo code in the description box below.
And so similar to for a lot of us, right? Like you start investing on your own, you master the skill, you start doing it with partners, right? And so for me, that was doing it with partners was in real estate, right? And then you now have a shit ton of your own capital that you're like, shit, I got to be able to even deploy my own capital because that's what ultimately helped you get started, right? And so that was the New Brunswick move, right? And then you realize as much as you can do all this real estate stuff, how do you build true wealth in the long run? To me is by owning businesses, right? And so if you think about owning businesses, the mortgage business is a business, right? That at some point in the distant future, if you grow it right, can in theory be saleable, right?
Yeah.
We were
You
looking
can sell
into,
like your book to like another mortgage.
or you can grow a team, right? You can grow a brokerage, right? And you can sell that off, right?
Is that your intention?
No, but I do want everything. Like I was filling out a net worth statement for another like program that I'm part of, right? And so part of that was like, do you have any businesses? How much does it generate, and how much can it be sold for?
Yeah.
Right. And I realized that the mortgage business as a whole is probably, significantly beat any other kind of return on investment that I've made. Right?
What's the multiple on
that's the problem, right?
Yeah.
Like, there's no real like
because like tech is like crazy, right? But mortgage is probably like,
mortgages would not be, right? Because like you it depends on the type of clientele, right? Like are you servicing a lot of first time home buyers, right? That's not really as saleable. Yeah, what was that sound? I mean, it's not for sale ultimately, right?
Yeah.
But and nor would I, right? But you start looking at, okay, like if that one business can do that, can you do it with other businesses, right? Like laundromats, ATM machines, vending machines, right? Like very simple like businesses that don't necessarily take up a lot of time, right? Airbnb businesses can be sold, right? Because like the value's in the contract with the landlord, right? And then the proven revenue model, right? As an example. So these different types of things, right? And so end of 2021, we tried buying a business, right? But you have to be ready to lose money as well.
Yeah.
Right? We probably lost between the three partners north of like 200K, right? And so you can make money and you will lose money. It is kind of the byproduct of the journey that we're on, right?
Yeah. If you could choose, would you rather have a house that's worth $1 million that you own outright, or a business that cash flows $10,000 a month?
A business that cash flows $10,000 a month.
The easy one,
right? How much is the mortgage payment on a house? Like
no, like you own the house.
I know,
right?
But
but you could take the money out of the house.
You could take the
too.
$10,000 and rent the place for $4,000 a month if you want.
Yeah, exactly. That's all the leverage, right?
Yeah. So you would pick the house?
No, the cash flow.
business.
Yeah, 100%. And then I would rent the house. Right? I'd rent it from someone else. Right?
Yeah.
And so for a long time when we got married in 2019, we were living downtown, and it made zero sense for me to buy a condo downtown. Like when I ran the numbers, no matter which way, and that was one of the first like blog posts I wrote. I got a lot of hate for it, surprisingly. I was kind of like, all right, man, like you can buy a house if you want. Like I'm just telling you what I noticed from running the numbers, right? Is that the rent is almost so if you buy a condo downtown, right, you your mortgage, your maintenance, your property tax, your insurance. I feel like I'm missing something, but
utilities.
Yeah,
it's like small though, right?
Yeah. So fuck the utilities, right? So at that time, I think so we lived at 10 York downtown for a while, right? And at that point, I think it was about like $600,000 or $700,000 for a condo. Don't remember the exact numbers. It was a 1+10.
1+10, okay.
Right? This is 2019. Summer or something like that. I don't know. Maybe I'm wrong. Maybe I'm off on my numbers, right? But I somehow ran my numbers, and I was ending up at, I think it was like $2,700 a month would be like my mortgage payment. So for simple math, assume half your mortgage payment goes towards your principal, half goes towards interest, right? So that's about $1,400 towards interest, right? And then I'm gonna have my maintenance expense, which would be about like $400 a month, right? So another $400 puts you at $1,800. Property tax puts you at $2,100. Add insurance to that puts you at $2,200, right? My rent expense was $2,200 a month, right? So I'm like, am I really saving any money by buying the condo? Not really, because the $1,400 that goes towards my principal is just going from one pocket to the other pocket, right? Versus really the way that I would make money by owning the properties from the appreciation, right? But as long as you buy real estate, doesn't necessarily have to be that condo, right? But as long as you can buy the detached that's at Victoria Park in Ellesmere or something like that, right? That makes a lot more sense, right? So you can buy your investment properties and you can rent where you live, and it gives you the most flexibility, right? So we moved in there 2019 June or something like that, right? We moved out 2020 June, and we went to another condo. We lived there for 2 years, and then eventually moved to Pickering. we own a house in Pickering, right? But that is very much a long-term stability thing more than the numbers don't make sense at all, right? Because to rent a house in Pickering would probably cost me $3,500. My mortgage could probably cost me the same thing, right? So the numbers don't make sense at all, but you want it for stability. You want it for multi-generational wealth and stuff like that, right?
Detached, right?
Yeah.
Has to be. Yeah.
Has to be, right? Because that's where the value's in the land,
exactly,
right? So going back to what we were originally talking about, I think businesses to me is the next stage of wealth generating, right? So how can you grow businesses that are ultimately at some distant point in the future saleable, right? Would be kind of the trick behind the game. And real estate is great. So you got to keep doing the real estate. I'm still doing the real estate. I think I have 3 offers over the last week. One got accepted on Friday. One I think might not get accepted in Scarborough, and the other one I'll know tomorrow if it gets accepted.
Is this from like the acquisitions one, like you're picking up new properties? Or?
Yeah.
Okay.
2021 August, I stopped buying investment properties. That was a Kirkland Lake 9-plex. Last investment property I bought. And then we were trying to close a business, and then I bought flips. But flips aren't really investments, right? Because those are like an active business that just generates immediate cash, put it in your pocket, and you're good, right? And then the market dips, right? I'm like, this is perfect. Right. But you kind of have to wait for the market is lagged, right? The real estate market is lagged. The stock market is a little bit more immediate, right? It's more liquid. So people react almost instantaneously in the stock market. The real estate market always lags. The off market lags the actual on market as well, right? So it's interesting. In an upward market, the MLS is kind of leading the way. And so buying off market, you can bridge that gap, right? So if the market is headed like this is the MLS as a line indicator, right? The seller over here, like if I was to ask my parents, hey, like what's your house worth? They're going to tell me, oh, like this house down the road sold for this value 6 months ago. And they're going to say, therefore, they think their house is worth whatever the comp was 6 months ago, right? Which in an upward market is great, right? Because off market sellers don't really know the value of their house. You can buy under market real estate and you can, benefit from that equity that's built in there. In a downward market, it's the opposite problem. The seller off market thinks that their house is still worth this price point up here, when in reality it's now worth down here, right? So you got to give the off market some time to kind of catch up with that, which is right now of the 3 offers that I have. The one that got accepted on Friday was an off market, but the other 2 are both on market deals, right? So where you buy the deal changes, but other than that, real estate acquisition methodology, it's all the same shit. Buy under market value, perform strategic renovations, lift the value of the real estate, refinance, take your capital out, and move on to the next one. And then obviously there's a rental part, but that's different.
No, I want to add to that because like I know like on market there's a lot of like really crazy deals right now because like a lot of people they're trying to get out of their homes. Like one, they can't afford it anymore, or 2, they have to close on another property that they purchased a little while back, so they need the money out of the current one. And then now like that house is on the market for like what, like 60 70 days now, right? Like on the market, right? So
on the mortgage side, like I see people do it all the time, right? Like it was a go-to move, right? Like everyone would buy before they could sell, right?
Because you had to.
And there was no doubt that you could sell, but it was always a struggle to buy, right? So the fear was of being homeless. Now people have kind of changed their opinions, but over the last 6 months, the result is you had people that had buys that were coming due, right? And they couldn't sell their real estate, so you try to refinance, you try to get by, right? But there was definitely a lot of fire sales. And I knew a lot of my clients, even that were refinancing, that were trying to scrape together down payment, like gifted funds from family and stuff like that. They still would have sold if someone would just give them a fucking offer, but no one was giving them an offer, right? And they were very fairly priced, right? Look, like real estate, you can create win-win situations, right? Even though it seems like you stole it at a bargain deal, like you also saved that guy from potentially being in default of his transaction, right? And that is a win-win. I'm winning on the dollar. He's winning by avoiding a lawsuit.
Yep.
Right? And ultimately, the pie can be bigger if everyone kind of creates a win-win situation. It's not like a limited pie that's like this big that needs to be carved out, right? The pie can actually just grow by working together, right? And I think for your listeners, like that's probably the one thing I would say is I think if they're struggling to get started in real estate, or if they're looking to start getting investing and creating wealth, and if the market just looks like it's unaffordable, no, it just means you can't do it alone, right? So like pull up, right? And I still do that today, right? It's like my time is limited, so I partner up with people that have the time, right? That maybe I just coach them and I just say, hey, you just do this, this, and this, right? And we'll be fine there. Right. And so that's how I perform my partnerships now. It's not so much on the capital side that I need today, but it's more so I need people's time. Right. I want them to be equally as invested in whatever we're doing.
So yeah, like you said, like so the person that's watching that makes probably, let's just say they make 50 grand a year, right? Like what would you say are the different strategies if they wanted to get into real estate now? Like, what would you say?
I think the long distance investing is still great. Right. I also understand people that want to invest in their backyard. Right. Because if I'd started off, because I have a lot of mortgage clients that all do different stuff. Right. So I think if you have a business that your time is better spent focusing on your business and that's generating you a much stronger rate of return, you do that. and then take your capital, invest with someone else, right? Or just own something that's a little bit closer, right? Maybe it doesn't cash flow as much, maybe it doesn't make as much money, but you're just trying to deploy your capital, right? So for that individual is very different from, but going back to your 50K example, that's probably a new grad that's just entering into the job force, right? Or maybe working for a couple of years, right? So if we talk about them, they have two options. One is they can
increase their income, obviously.
Yeah,
right?
for sure they can increase their income, right? But I also think if they're just looking to get started in real estate, they can invest long distance. Think about Sault Ste. Marie. Like if it was Windsor for me, it's, I have clients buying in Thunder Bay, Sault Ste. Marie, Sudbury still works, right? North Bay, Cornwall, 4 to 6 to 8 hour range, right? Like depending on how much you're willing to grind. But that's exactly it. That's a grind. Yeah. Right. Like when I was investing in Windsor, I think we'd probably go down every 2, maybe 3 weeks. Right. So that means and I'm married, like wife's just chilling at home and I'm leaving and I'm putting in the time to drive down and grind. And it's a day trip, right? So it's not like I'd stay over in Windsor, but I'd wake up at 5 a.m., head out of the house by 6. You get to Windsor by 10, 11 because you've loafed a little bit on the road, right? And then you do some shit from 11 to 5, right? Visit some houses, talk to some people, do some shit, right? And then you head back from 6, thinking you'd be home for 10, but somehow it always becomes 11, 11:30, right? So that's a full day's grind, right? And not everyone can do that.
I feel like you have to have a passion for real estate to do.
Yeah, you do, right? And it doesn't mean 2019, 2020, I had the worst back pain. Yeah, because I'm doing 8-hour drives every 2-3 weeks, right? And so my back was messed up. Right. And your body goes to shit. You're eating on the road. You're basically living out of your car. You're I'm sure you guys have gone through that kind of stuff as well, right? And you're just eating shitty food and you're just living a shitty life. And it's the stuff that you give up, right? In exchange for a payout down the road, right? Yeah. But not everyone can do that. Imagine if I had 2 kids at home, no way, right? I could not do that. So for that individual, it's just, hey man, you just got to pool resources, right? And a pretty prominent lawyer in Toronto actually said this to me when I was first getting started. He's like, look, man, if you don't have the money to buy real estate, just get 2 of your friends together and each of you guys put in the 40K each. You have 120 now. Maybe you can buy a 600K condo in downtown, right? And you can figure out the Airbnb or whatever you're going to do on that to kind of maximize the revenue. Take it as far as you can take it. Do your renovations using unsecured lines of credit, right? There is a way for people to do it, but if everyone wants to go at it alone, the result is no one will move forward.
Yeah. I feel like back in the day, it was obviously real estate was cheaper, but there was no Airbnb. Now you have that potential to make that crazy cash flow with the active business, right?
Yeah.
By owning real estate.
I'll give you an example. One of the properties that I'd offered on, I basically knew who my competition was. Yeah. Right. And this has actually happened to me a couple times. Me and my buddy Austin, we were this is another story. Rewind back to May of this year. I was looking at a property in Windsor. It was a 4-plex. I was just about to submit an offer on it. Austin calls me or messaged me or something. He's like, yo, did you see this 4-plex? I'm going to make an offer on it. I'm like, buddy, just chill out, right? We don't need to compete against each other, right? There's already enough competition out there, and we me and you competing on this against each other, going head to head, is no point. I'm like, why don't we just take it down together, right? And I've done the same thing simultaneously, multiple times. Part of being I think public and on social is people kind of know what you're buying, they know what you're up to, they know what you're looking at a little bit more, and they'll message me and they'll say, yo, I'm looking at the same thing, why don't we do it together, right? And you can do it together rather than competing. You can actually just grow the pie together, right? And I think not enough people think about that more seriously. So yeah, that's probably what I'd say for that individual, right? It's just pair up and pull together and get take action. I think that's the biggest part of it, right?
Yeah. Okay, so I got a mortgage question for you. So there's a lot of guys. You don't need to answer this if you don't want to.
Yeah, no, that's fine.
A lot of guys, they bought when the market was higher, right? And they extended their closing dates, right? So we're seeing this a lot right now in the market where a lot of guys, they can't close because they get the second appraisal coming in from the bank, and they're 100K, 200K, 300K short. What's the solution for that? Besides pulling 200K out of your ass.
So I guess it's going to depend on the type of property that they bought, right? So I obviously have clients that have been in similar situations, right? One solution, like you said, is pull 200K out of your ass, right? Because you can get gifted down payment and stuff like that, depending on the type of property they're buying, right? The other side of it is if you bought a property that needs renovations, for example, say they bought a property for $1 million, right? They were planning to spend $100,000 on it to renovate it, and if they thought it was going to be worth 1.3, 1.4, now it's going to be worth 1.2, right? Your worst case is kind of that you're just leaving your money in the property, right? You're not getting that full bird that you thought you would, right? You're going to have to scale up and get a little bit more from scratch, right? So it all comes down to what's the type of property that they bought? What's the actual situation with them? For me, a lot of my clients are investors. I'd say about 80 or 90% of my clients are all investors.
So they're more calculated and stuff too, right?
Yeah, it's calculated. And their worst case is, hey man, we're just going to leave our property and it's not going to be a full bird like we initially thought when we bought the property, right? But I still have clients that are buying like first time home buyers and stuff like that, and those type of properties. I think the mistake there might have been even on delaying closing, right? Because the market has been downward. Your best solution was probably
a faster closing.
As soon as they bought and I do this all the time with my clients, that like one client just bought a property in Tobago and he had a conditional for like 5 days, and we did commitment and appraisal done right away. And I'm like, now you waive conditions, right? Because like the market is going down, and as long as we get that appraisal done first thing, you've locked in the value, right? So that kind of would have reduced risk a little bit there. But yeah, definitely, like some people come it's a little bit of a shitty situation that they come to you in, right? And some people have to get into private money and stuff like that. And even if you get into private money, like you got to have an exit plan, right? And that exit plan might actually just be, hey man, you might have to close this and sell it. Yeah. Right? Because if there's no way that you're going to be able to qualify out of this, like you're going to have to take the L.
But even then, they're going to take another L when they sell it, because the market's still going down, right? Yeah.
So it depends on each case by case situation, and that's where the problem is, right? Like sometimes if people can hold it, that's ideal. Like even if you put you on a B lender, like hold it, right? Like borrow whatever money you got to borrow.
4 or 5 years, right? Yeah.
But some people genuinely cannot hold it. Right. And I think that's like a byproduct also of like our, just where we are, right? Like super unaffordable like prices, right? Where you got to be a pretty high income earner to like be able to like afford a lot of real estate in Toronto. Not everyone kind of accepts that. Yeah. The solution is there's really no solution, man. You just got to be a little bit more diligent, I think, in the current market that we're in, right? And just kind of go from there. You seeing a lot of that still? I feel like that was probably like
at the beginning more, but like right now it's kind of cooled down a bit. But I
think it was more predominant in like March, April, May, June.
Yeah. That was really anybody who had like an extended closing, like they got fucked.
Extended closing kind of fucked too. Yeah. Pre-cons too. Yeah. Like some people bought like pre-cons at the end of 2021. I'm like, hopefully you got a pre-approval, like a firm commitment done that's valid for like 2 years, right? But not everyone does. So we'll see what happens here.
Yeah. So you mentioned your blog earlier. Like, when did you start your blog?
The social media journey's been interesting. I think it's not like I'm like some like crazy like influencer or something like that, right? Like that's a good trait, right?
Like you know Dave Portnoy?
No,
you don't know Dave Portnoy? He started Barstool Sports. He started like
Barstool
Sports. Yeah. He started that in like 03 and then sold for like $100 million.
Damn.
Right?
Written form content is the easiest way to hide your face.
Right?
And so I was never a social media guy. I was that guy that would post on social once a year. Right? Like a typical guy. Right? And I'm like, you know what? I really don't want to get in front of the camera. I really don't want to do stupid shit. Right? And so I was like, you know what? But I can write. Right? I can write an article, and only the people that are interested are going to read it. That's the best part, right? And it's not me like presenting.
And you can be like anonymous somewhat, right?
Yeah. So I thought about posting anonymous. I'm like, that's what I initially wrote my shit for. And I'm like, what's the point of writing anonymous, right? So I did end up publishing with my name on it. But it was written form content in 2019. I'd post once a month on a Sunday, I think is what I started off with, right?
Was it like a WordPress blog or
Medium?
Yeah, Medium.
Yeah. I would just go on Medium and I'd have an article there, and I'd make it like super easy to read, super understandable, right? Like not like too technical. Like it was just engaging. There was pictures, stuff like that, right? Once a month is very sustainable for like anyone, right? It's not even that hard. It'd be like 5 to 7 minute reads. On a Sunday morning, I figured people are lying in bed, they just read it, right? And so I got surprisingly more traction than I thought.
So you learned about like SEO and all that too?
No, I didn't do any of that shit.
None of that shit.
I just posted on Medium, and then I would screenshot my article and share it on Instagram.
Okay.
Right? And
that goes a long way, bro.
Yeah. Well, back then I had like 400 followers. Okay. Right? So it's not like it doesn't go far. It just kind of stays.
Was it like a lot of real estate guys you were following back then?
No. I was following real estate people, right? But like my people that were following me were like, my boys from Markham and like Glory and like whatever, like random stuff like that, right? But then I would take that same article and I could reshare it on Facebook and I could share it on LinkedIn, right? So I'd do a little bit of that once I got more confident. I did 10 articles like that. So I guess 10 months worth of like once a month releasing an article, right?
What was that thing that was fueling you to do that?
I needed partners.
Okay.
Right?
So that was the intention behind it.
Yeah, that was it. Okay. And that's right.
Everyone, and this is before you met Austin?
Probably around the same time.
Okay.
Right? I think everyone with their social media journey, you got to have some sort of like objective for it. Right? Otherwise, you're just doing all this shit for no reason. Right? Like there's got to be a business rationale behind it. Whether it's adding credibility to your name, right? Which is perfectly fine if that's what it is, right? Whether it's attracting partners, whether it's attracting new clients or something, right? Like there's got to be some sort of objective to doing social media. Otherwise, like I don't think we're all trying to be influencers here, right? Like realistically, like we're just 3 guys sitting in a fucking room, right? We're all just normal looking guys. It's not like we're models and like 6-pack abs either, right? So you just got to have a game plan for the social media. I'm still not an expert at it. I take time off. I struggle with social media. It's probably the biggest pain in the ass and the thing I hate the most is social media, right? Which is why like as soon as I could hire someone, I hired someone. Like I don't want to do this shit, right? And my only responsibility is to post stories, and I probably have no stories up right now, right? So I struggle with it, but I think it's vital, right?
Yeah.
So I continue to do it. First blog post in 2019, and then I think I started doing before and after pictures in 2020. And that's when like people actually start to know that I was like more serious into real estate, right? Alex Mosey actually says this, right? He's like, if you feel like you have nothing to share on social media, it just means you're not doing cool shit, right? And if you're doing cool shit, just share it, right? Just share it, right? So, in 2020 we were doing cool shit. Right, we were buying a house every other fucking week.
Yeah,
right? It was kind of crazy times. Maybe not at that extent, but at least like once a month.
Yeah, it's still pretty impressive. Right? Some people would never buy a house in their entire life.
Yeah. So I mean, as long as you're doing cool shit, you just gotta share it, right? The problem that I struggle with now is the shit we do a lot of times gotta be confidential, right? So you can't really share a certain amount of it, right? And then sometimes I know I've shot myself in the foot. I've talked about like a deal too early, and then like someone else will fucking come in. And I was like, bro, you should just keep your mouth shut, right? So there's a little bit of like, which way is the right way to go and like stuff like that. But I think for a point in time, social media made a lot of sense, and still do it today, but do it a different method now. Yeah, you guys are both just getting started in your social media journeys, or you guys out there?
This guy's, I would say he's a pro.
You're a pro in the game, but he's shifting over to real estate now. So
this guy's a YouTube channel. He has his own YouTube channel. Yeah.
Really? Back in the day. I used to do like car videos and stuff.
Okay.
Back in the day, and I actually grew up pretty big too. Like, and I stopped because it was like it wasn't generating that much income. I was putting in too much time into it too. So I was like, let me do some financial.
Well, I think it's interesting. I think YouTube, you got to be able to attract a massive audience to make like decent sized money on YouTube. I think, right? I think the Canadian real estate space is too small, right? I think if you're going to be in real estate, you got to be in the US, right? I think even for financial independence, financial literacy, you can probably talk about.
Yeah, that's why we're very broad. We're all.
You have to be broad in order to Even with the Rise podcast, we're like super niche. We're within one topic, right? And so we've thought about bringing on like business entrepreneurs and stuff like that. As myself and Austin, we've kind of changed what we're more interested in. Like real estate is still there. Real estate will always be there, right? But we're also more into like business and stuff like that. It has
to evolve with you too, right? Like, cause like I'm sure like when you first started investing in real estate, you weren't like looking into like buying businesses and making them more profitable and stuff, right? Like what does that even call it? Essentially, it's almost like angel investing, right? Like.
It's basically the private equity model.
Equity model, okay.
Not to like over glorify like what we're doing. We're not fucking private equity funds, right? But like it's a private equity model that everyone's followed, right? So for years they would buy companies where there's room for efficiencies, right? Can you combine a bunch of small companies? Like property management's a heavily fragmented space, right? Can you buy a couple of property management companies and can you combine them through like operational efficiencies? And then can you exit at a higher price because you've now increased net income, right? It's the same business model, just different stuff on a smaller scale.
It's crazy, like growing up, like in the Brown community, Tamil community, like you just know, accountants, lawyer, doctor.
It's true, man.
No one's talking about private equity, venture capital, tech.
Up until the second year of university, I had no idea what investment banking was. I was fucking pissed when I found out. Like, well, why didn't I do this shit? Right? Because like to my parents, and not to say anything wrong. It's a result of being an immigrant culture, right?
Their job was to come here,
Yeah, exactly.
You don't know what you don't know.
And they advise you, exactly. They advise as much as they know, right?
Exactly.
We could get into a whole other topic on that, right? Because eventually, like when I quit my job, I never told my parents, right? I just kind of just quit. And then my dad listened to my podcast and he found out.
No way.
My dad's a little schemer sometimes. So like he'll find out and he won't say anything. So he started asking me some questions like, this guy fucking knows. I'm like, this guy knows that I left my job. He'd be like, so like, how's work today? I'm like, yeah, it was good. Like, whatever, just making some shit, right? He'd be like, okay, cool. And he wouldn't say anything. I wouldn't say anything. I started getting suspicious. I'm like, this guy knows. He doesn't care that much about my job, right? And then he never told my mom. And then eventually I just kind of came to them. But
like they weren't pissed and stuff. Like they obviously like trust you. And, like,
not to get off topic about like a lot of this stuff, right? But like my parents come from two very kind of different family types, right? So my mom's family back home in Sri Lanka was the business type, right? And they lost everything in like the war and like all that kind of stuff, right? Like the buildings burned down and stuff like that. And that was my mom's biggest fear with the real estate here as well. She's like, oh, you're gonna lose everything, right? My dad's family grew up with nothing, but my dad had some small micro businesses there. Like he had like an ice cream store and a couple things there, and he was also like an accountant on the side before he came here, right? So he was more like, yo, you do business, you like go into this, you live like kind of like you live my dream, right? Like he thinks it's dope as fuck, right? My mom's like, nah, man, you gotta like watch your risk, you gotta just have like a steady job, right? So they both come from very opposite angles, right? And so the immigrant kind of vibe. But going back to the topic of university and stuff is you don't know what you don't know, right? So I went into accounting just thinking it was like the only route, and then you get there and you learn eventually about like investment banking and stuff like that. But I kind of followed I didn't follow basic economics, which is everything's a sunk cost, right? Like just because I dedicate a year towards accounting doesn't mean you need to spend the next 5 years doing accounting, right? You should just pivot, right? But I didn't. And so
I guess that comes with like the whole like the immigrant mentality too, right? Like you're not like when once you're like kind of going in a specific route, like you're not gonna you wouldn't initially have the balls to just kind of leave what you're doing and be like go into that
But I do think this next generation that's coming out there, man, they are
so smart because they have like fucking podcasts and shit like this,
they have shit that we didn't have for sure. We had shit that they didn't have for sure, right? So the grass is always green on the other side, but I think the next generation I think will be very interesting.
I'm seeing a lot of like super young, like early 20s kids that are like doing like big numbers, like doing like successful shit, bro, like boxing and like excelling in boxing and like
more unique sides.
There's this 17. Remember the one I sent you? There's a 17-year-old girl on Twitter. Like the algorithm's crazy. Twitter algorithm's crazy, right? And like she makes like $15K a month, like doing a consulting business. 17 years old, like through like making logos on Canva and stuff like that, and like just marketing and stuff.
I guess we could talk about that a little bit, right? Like I think this next generation that's coming in, the only downside to it though. So real estate, for example, like real estate, for example, has become super sexy. Yeah. Right. Like when we were growing up, like when we were 25, like I'm pretty sure most of us didn't really care about real estate. None of my friends cared.
It's like every uncle was doing it.
You just know, like you buy a house, you live in it. You pay a mortgage.
I was super into it, and none of my friends gave a fuck. And they're like, Mayu, like we just don't care. Right? I'm like, cool. So then you start forming your own friends, right? Or no, I'm still friends with those guys, but you form another group that you can talk to real estate, and those guys are.
That's kind of how like we started this podcast.
Yeah. So I think this next group that's coming in, they know about real estate, they know about crypto, NFTs, and all the different ways that you can kind of make money. Right. The problem is there was major hustle, I think, behind, like, that's why, like, I talked about my real estate journey from 2015 to today. Yeah. Right? Because there was major ups, there was major downs, there was major L's and major W's along the way. Yeah. Right? And I think all of that gets kind of, like, smushed up and, like, tucked away. Right? So people just think I can just do, people just think I can just do real estate investing. Like, I actually had, like, you guys are both familiar with, like, wholesaling.
Yeah.
So, like, one of my friends, like, I won't go to do too much detail, but let's just say like a younger individual just said, hey, I just want to do wholesaling and make bank. I'm like, man, like it's not like that easy, right? Like it's not like you just decide I'm gonna wholesale. Like you could be spending 2 years of your life and like not get a single paycheck, and like you just don't see that. Instead, you'll see the guy that made 200 grand in 3 months on like a podcast. Right.
They make it look easy on TikTok though.
It's true, right? And you know what? Some people do have it easy. Some people have it hard, right? And you know, there's a lot of like real estate investors, like people drop out of like university and like college or whatever, and that's fine, right? But they drop out of university and college because the time that they spend going to university and college is too expensive because it's more lucrative for them to do this other kind of side venture, whether it's wholesaling, Airbnb, or whatever it is, right? The problem is when you decide you want to drop out of university and college and then you just sit at home, right? Like you have no opportunity cost. Like you can start wholesaling on the side, right? And then once that's successful and the opportunity cost of going to school means maybe you can't source another deal, then drop out, be my guess. But until you've done this on the side enough and like dedicated enough time to this to like actually be able to make kind of going to school and university kind of an actual expense, it doesn't make any sense to drop out, right? So I think they like miss a lot of the kind of the things behind the scenes and the hustle that goes behind it.
There's a lot of hustle that goes behind it. Yeah.
So I think that's what gets kind of overly glorified a little bit. But
it's not for everyone, right?
We'll see, man. We'll see what happens.
My undergrad's in accounting too. Like I didn't do my CPA, but like my undergrad's in accounting. So like that's why I'm like so like obsessed with like investing and looking at balance sheet, income statements, like building like with like operating a business and like profitability and stuff, right? Like I feel like that's what you're into.
So here's the other thing, right? I think on this wealth journey, everyone has a certain type of skill set. Yeah. Right. So like because I know real estate, I just talk about real estate, right? But example, like you have real estate investors that. Some of them are, for example, contractors that became real estate investors, and their advantage is being able to do renovations for really low cost, right? Some of them are salespeople, right? And so their advantage is maybe you can internalize like the commissions, right? Maybe you just have a lot of like partners that are like ready to go, right? And they have a huge advantage on that. The contractor is probably going to struggle to raise capital, but he'll be able to do the work for a lot cheaper. The sales individual probably has a lot of people that are willing to fund deals, or maybe is willing to source really good off-market deals, and they might struggle on the contracting side, right? And then there's another side of it, which is like these business individuals, right? So people like ourselves that have kind of done business and kind of grown through that grapevine, right? For us, it's, you know, we weren't salespeople. We weren't contractors either. Huge disadvantage early on, right? But eventually when you want to grow out a business, right, that's where that like accounting knowledge, like I don't know what kind of program you did undergrad, right? But like I did a BBA where like we learned like organization behavior and like HR, marketing, shit that I was like, I'm not gonna fucking use this.
I had to take all those.
And so for me, it was just like I'm streamlined in accounting, right? So when I was at EY for EY, like this is like an accounting firm, and all you do is just accounting, right? So I didn't use OB, I didn't use HR, I didn't use marketing, Porter's 5 Forces, like fuck shit, like economics, like I just didn't think it mattered, right?
Yeah.
But then you start like, you're now an entrepreneur and you're scaling up a business, and you start like all those like OB concepts and like Maslow's hierarchy, a lot of like very simple stuff that you just kind of brushed off, like comes back into play in ways that you just don't really see yourself applying it. But
and all this psychology and stuff. Oh my god.
Yeah, you just step back and you go, oh shit, like this is a lot of like very basic, because you just think everyone knows it. Right? Just because you know it. Right? But like that contract individual will struggle at a certain point when it comes to business concept. Bookkeeping and accounting, economics, like that kind of shit comes naturally to me. Right? Like you talk about interest rates, like I could talk about interest rates, I could talk about currency, I could talk about correlations and bond yields and all this kind of shit. I just think everyone knows it. The result is not everyone knows it, right? So I think everyone has some sort of an advantage to them, and that's where I also think the partnership thing comes into play as well, right? Because if you can partner that contractor with the salesperson with the business thing, that's where you can build a fucking empire.
That's crazy how he says that, because like this is the sales guy, I'm the business guy, and then our Vino's the HVAC, the contractor guy.
That's crazy, right?
That's really all you need, right? That's really all you need. The three kind of facets, and then you can make like arguments on marketing and stuff like that, but you can always outsource and hire people for those various skills that you don't have, right? I get what you're saying as well. Like I think accounting and all that kind of stuff, it seems irrelevant until it's relevant. And
because people always make the argument that like obviously the tuition and for like getting a job, the return on investment of like education and stuff, but it's not true in every scenario, because it actually comes back into play depending on like what kind of degree you're doing. Like obviously if you're doing like psychology or something like that, like just the undergrad, obviously then you can make that argument that your time's better spent elsewhere. Right.
I know this episode's been all over the place, right? But I think take it back to like, I think it's also like what you make out of that time, right? Like when I was in undergrad, like me and my wife now, we've actually been dating since I was in grade 10, right? So like my like unique advantage was I never really chased girls, right? Which I think a lot of people chase girls and they spend a lot of time on girls or guys, right? Like a girl could chase a guy or whatever, right? But we're not gonna get into that. So I think too many people spend time with that stuff, right? But for the result for me was like in university, I just studied. Right, you just think about the stupid business ideas that you can do, and you just try them out, and you fail, and you just kind of like pull yourself up. Right. When I graduated, I'd go like partying, but like not really for the sake of like showing off or whatever, just like have a good time with the boys, right? But you're not really trying to like go clubbing and like get bottle service and do all this kind of shit, right? So you save all your money, right? And so
it literally sounds like
I'm like yo, Vint.
So it's a very unique advantage, right? And I think, but at the same time, like had I not gone to university, I think probably would not have been mature enough to like properly realistically like hustle, right? And I think university taught me the hustle, like it taught me to grind, right? It taught me to just work long hours, and then going to EY taught me just like the 80-hour work weeks, and like it'd be crazy, like we'd be in busy season at like the office until like 9-10 p.m. and I'd have fucking tenants calling me, and I'd be making them stupid. We sit in a table like this in an office room, and like my phone's just going off because like I posted like an ad the day before to like rent out like my Ajax house, and I'm like, how do I fucking explain this? Like phone's just going off, and I'm just like answering it. Okay, like text me. Like okay, text me. So it teaches you a lot about like hustle and like just like a work grind culture, right? I think everyone's got some sort of value in whatever journey they took, and everyone's just got to find their own journey, right? So
have you dabbled in the stock market, or like you just focus mainly on real estate?
Yeah. I've dabbled in everything. Like I genuinely, well, not NFTs, just because I partially could not spend the time
you have to spend so much time to understand.
Honestly, I just didn't spend the time to figure out how to buy it. Right? If there was like a very easy, quick way to do it, I probably would have done it. Right?
Yeah, we need to make a reel, right?
Maybe there is. There is, right? I just wouldn't know. So I've dabbled in stocks, I've dabbled in crypto. I still have a crypto mine actually, but that's just sitting there.
What are you mining?
Well, I was mining ETH, and now I don't know. I just haven't had time to figure out what to switch it to, right? That's another side of it. It's honestly, I don't even know what it's doing. It's whatever. So like I've dabbled in stocks. I probably started off in stocks first in 2016 or something like that, right? Like we're not talking about like massive amount of money, right? But you try. And I realized I wasn't making a whole lot, right? So I'm a big believer that
like, were you like swing trading, long-term investing?
Swing trading,
okay.
Right?
Yeah.
But I do think the stock market is closer to a perfect market, while the real estate is closer to an imperfect market, right? Because you have all levels of investors investing in the same market, in the stock market.
Yeah.
Versus in the real estate market, you have novice investors and first-time home buyers competing for the single families and duplexes. You have medium investors competing for the triplex, fourplex, sixplex, sevenplex, whatever, that kind of like middle category.
Yeah.
And then you have the heavy hitters hitting the
You
20
have the Grant Cardones.
20 to 100 unit apartment buildings, and you have the even heavier hitters there. So everyone has their kind of like areas.
Yeah.
The result is you don't have a perfect market, right? And then there's always like informational gaps and stuff like that, which still exists in the stock market, right?
Yeah.
But the biggest problem to me was just, can I compete with a bank in the stock market or a hedge fund?
Yeah.
A fund that has a shit ton of analysts, a shit ton of like people doing all sorts of research. Do I myself sitting at home in my fucking pajamas think I could buy a stock better than them? No. Right? Right? Can I compete in my micro market of, call it like Scarborough?
Yeah.
Right? Against
what do you think of index funds though?
Index funds are great. Right? Good.
But that information is not out there. Like the average person doesn't know that index funds, because they just buy mutual funds from the bank.
From the banks. Yeah. It's true, but I would say I actually choose to go the private lending route more than I go index funds. Yeah. I don't know why I do this stuff sometimes, but like I'd get a call from like some like fund guy like ask me to invest or whatever. And I'm like, yeah, and then you start debating with real estate with them, right? And so like they would just make up like numbers, and I'd just be making up numbers. It's just going nowhere, right? But at some point I'm like, look, man, like the average stock market return, call it 6%. He'd be like, no, it's like 10%. I'm like, okay. 6 to 10%, somewhere in that ballpark, right? Per year. So if you can just generate more than that. So for me, I do it through private lending just because I understand the real estate asset class a lot more, right? And ultimately, that to me is like a little bit better of a rate of return than what I suck at the stock market. I tried it. When I was getting better at it, my wife actually switched into a role that required me to report every single investment that I made, right? So I was like, I'm not going to do that. Right? I stopped investing in the stock market.
Going back to the private lending, can you kind of explain what private lending is to the people that don't know, and kind of go over like the pros and cons of private lending?
Yeah. I've actually been private lending since I think 2017. Before I had any money to my name, I had a $59,000 unsecured line of credit with Scotiabank at, I think it was like prime plus like 4%, which I think at that point, I don't remember, maybe cost me like 6% or something, right? I had a buddy that, or not a buddy, it was like a kind of a family member, right? That would lend out money. So I just kind of took out $50K from there and I gave it to him at 12%. And my cost of borrowing was 6%, right? So I just kind of made that spread. I had no money. Right? You just dipped into unsecured line of credit, gave it to someone else, just make a little spread there, which is great at that time. So private lending is basically it's a secured form of lending. It can be secured or unsecured lending, where you're essentially being the bank. So you're acting as a bank, as a mortgage lender to an individual that essentially needs the money for various reasons, right? There's usually 3 kind of tiers to this, right? So there's the first position mortgage, second position mortgage, or unsecured mortgage. The rates of return that you will get are directly correlated to the level of risk that you're taking. Right? And risk can come from the borrower's risk profile, right? So like, what's their credit score? What do they do for a living? Like, what's their experience level? It can come from the property risk, like what's the property that you're lending on? How much equity is in the property, right? Like, are you going 95% loan to value, going 70% loan to value, and so on, right? There's geographic risks that can come into play, right? Like, what's the market that you're lending in? Like, if you're lending in Toronto, as an example, as far as real estate can go, it's a pretty liquid type of investment, right? Or loan, right? So if someone defaults, you can probably sell that property off within a month on a fire sale at a decent loan to value, right? Versus if you're investing like 2 hours north or like 8 hours north or something like that, right? Like, it's a little bit less liquid. It'll take longer for you to sell that property, right? So there's various different types of risks that impact the overall return that a private lender can get. But first, second position mortgages are, for the most part, great. Unsecured lending, usually don't recommend it unless you have a personal relationship with the individual that you're borrowing, that you're lending to.
I feel like this isn't talked about at all for some reason in Canada, but can you utilize your RRSP, TFSA for private lending?
Yeah, you can. So I use private money as well, right? So I have a lot of lenders that will lend directly from their RRSP or TFSA to me.
How does that work though, like the tax-wise and stuff?
So RRSP is tax deferred, right?
Mm-hmm.
So at some point you will pay tax on it. It just might be in 50 years when you withdraw the money when you're 70. Any interest that's earned is earned within your RRSP. You cannot do this through the banks, right? So basically what you got to do is you got to take your RRSP money out of the banks. You got to move it to Olympia Trust, right? Olympia Trust is...
There's another company as well, right? There's Olympia and someone else.
I'm blanking on what the other one is.
I got this from Kyle Ford. I learned this from Kyle Ford.
I got the B's,
it started with the C, I think.
I
just blanking on whatever the other one is, right? But you can move it to Olympia, and then you can start to administer your own loans through your RRSP in Olympia Trust, right? Now, it's got to be to a non-arm's length party, right?
Yep.
So like you can't do it with an immediate family member or anything like that. And it's got to be the minimum interest rate that you get on that has to be prime. So basically, if you're doing it from your RSP, then it's tax deferred. At some point in the distant future, you will pay taxes on it. But hopefully during that time, your capital will grow and your interest will kind of compound on its own, right?
Yeah.
If you do through your TFSA, it's fully tax free, right?
Yeah.
Same process. Move your TFSA funds into Olympia. If you go and you ask someone in bank about this, they're gonna say it's not possible.
Exactly. That's my problem.
Right? Because
right?
the banks want your RSP money and your TFSA money to be invested ideally in their mutual funds.
Yeah.
Worst case, do some trading. They really don't want you to be a mortgage lender, right? So they're just gonna say no, right? That's why you got to move your money outside of the banks, unfortunately. Job, right? Yeah, basically, right? So I do have a couple clients that do that, and I think it's a decent like method, right? Ultimately, the thing with private lending is it's more active, right? I think if you're just investing in ETFs and mutual funds, you can truly be like
passive,
like you're done, right? Like you leave the money there and you don't have to think about it. If you're administering your own money and your own loans, you gotta do the research, make sure you're not going to get fucked over here, right? Yeah. And you're responsible for your own capital, right? So,
But there's obviously like private lending businesses that will kind of vet the deals and stuff, right?
Yeah, you could also invest in what's called like a MIC, right? So a MIC is a mortgage investment corporation. Yeah. It's basically like it's an entity that will borrow funds from, it can be registered funds as well, right? So you can invest in a MIC through an RSP or TFSA, and then that MIC is in charge of doing their own due diligence. They'll have their own documents talking about the types of loans, geographies that they'll kind of lend out in, the types of rates that are their minimums, right? And then they're in charge of kind of going out and administering private loans, right? Obviously, the rate of return from a MIC will be lower than if you were to administer the loans on your own, right? Because you've got an intermediary. Right. Anytime you can remove intermediaries, it means you'll get a higher rate of return, but it also means you'll probably spend more of your own time. Right. So it's just kind of a trade-off there.
Okay, I'm going to ask you a mortgage question. So what's the difference between a mortgage broker and a mortgage agent or a mortgage specialist?
Yeah. So mortgage specialists are really like titles that are given to in-branch individuals, right? So people that work for the banks directly. Mortgage agent, myself, similar to you guys are, you're a real estate agent or you're a real estate broker? Yeah, real estate agent, right? Yeah. So you basically work for a brokerage, right? Mortgage brokerage, real estate brokerage, they're kind of the parent entities that we all just kind of like hang up our license with, right? They're in charge of compliance, they're in charge of training, they're in charge of really just governance, right? Managing the flow of paper, if you would call it that, right? Whether it's compliance paper, money paper, whatever, right? So I'm a mortgage agent. I'm part of Synergy Mortgage Group, which is a brokerage based out of Hamilton. Everything's done pretty remotely. Purely a lot of investor-oriented clients, right? Obviously, we still do primary residences and stuff like that because the process is the same, right? But that's the difference. It's very similar to the real estate world.
And what's the pros and cons of going to a mortgage agent versus going to like your traditional bank?
I think the reality is people come to a mortgage agent for service, knowledge, and convenience, right? I think the ability to text your mortgage agent at any time of day, right? And to really just be able to kind of get a comprehensive kind of support from a mortgage agent, right? The key is to be very knowledgeable about this stuff. I think the number one things that banks do wrong is they hire the tellers and new grads, which is fine, understood, right? A lot of the individuals that work as FSRs, or like if you go into a branch, you're probably going to meet some variation of I've been working for 1 or 2 years. Like myself, right? Being like you own multiple properties and now you're like a mortgage agent, right? And then you also now bring in like a tax knowledge base, right? And you understand the investor landscape. I understand people that are trying to do Airbnb. I understand how to position like commercial multifamily and stuff like that, right? That's you're not going to find that in branch, right? So for someone that really is just like a first-time home buyer, just ultimately looking at rate sensitivity, and you've got a straightforward file and you're in like $100K each and like and you're buying like a 600, 700K house, that's no biggie. Just go in branch, right? Go in bank. You'll get the best rate, 100%, right? And I think most brokers don't say this, but I think the bank will almost always undercut you. If a broker is competing, I think, with the bank on rate, unless it's a really bad bank, and for whatever reason, this bank is just not competitive on rates. For the most part, unless a broker buys down the rate using their commission, the bank in branch will be able to provide a better rate, right? Similar to a realtor though, right? I think if you are exchanging commission to try and win the business, then you're probably not providing the best service, right? So I think it's always a trade-off. I would say my clientele of investors, the rate conversation very rarely comes up. It's just, hey, I just want to buy this house, right? How do we buy this house? And then how do we make sure we're good for the next house, right? And call it greed or call it whatever, but people want aggressive growth, right? And You go in branch, it's very transactional. So yeah, that's what I think it is. Right? I had the same doubts though, like early on. I've always worked with mortgage agents when I was an investor, kind of scaling up, just because it's easy, right? You go in branch, you say one wrong thing, you're kind of fucked, right? You go to mortgage agent, you can kind of.
What do you mean by that? You're kind of fucked, like in what sense? Like,
oh, like your file could be dead just by saying the wrong things, just by getting an individual that doesn't know how to position a file, right? The entire financing game is just communication and presentation. How do you pitch something? How do you present something? How do you explain stuff, right? How do you help the client position themselves so that they're ready to buy a house, right? Versus you go in branch and it's just, okay, like you're kind of just passing around papers, right? Just, hey, give me a payslip, here you go, to underwriter, right? So yeah, a little bit of the communication expertise. I think that's why people go the broker side.
Can you also talk about the three types of lenders, like the A side, B side?
Yeah, you guys, okay. All right, so I mean,
basic stuff. This is all the basic stuff.
It is basic stuff, yeah.
But you'd be surprised. A lot of people don't know this stuff.
Exactly. That's exactly what we just talked about 10 minutes ago, right?
Yeah.
It's just like you know all this stuff and you just kind of take it for granted, right? So within the mortgage financing world, there's obviously the A lenders, which are going to be your banks, right? But also monoline lenders, right? So that's where you get MCAP, RFA, Radius, Home Trust as an A side as well, right? Those are all A lenders. They have solutions that are really meant for what they call the cookie cutter kind of borrower, right? So salaried individuals that have straightforward income, or they've been self-employed for multiple years and they're buying well within kind of the realms of their financial kind of capabilities. B lenders are really applicable for three types of borrowers, right? One is if you have a bruised credit, and that's usually where you're going to get the highest rate on the B side, right? Because that's also where the highest risk is a little bit as well, right? The second is high ratio individuals, right? So that's where the debt that's on the file relative to the income really doesn't make a whole lot of sense, right? So the higher the ratios go, the higher you might need to stretch out amortizations, or you might need to do a couple of different things, right? But you're going to be paying probably in the medium range of B lender rates, right? And then the third is basically newly self-employed individuals, so stated income programs, right? So that's where the rates are a little bit more reasonable, because you can still support the income. It doesn't mean, hey, like Mayu just says he earns $1 million, write it down, right? You still need to be able to substantiate the amount of income that you're making, right? Maybe you give them 6 months of bank statements or something like that, right? Just to kind of support the total picture, but that's a stated income program, right? So those are the three types of individuals that usually go on the B side. Believe it or not, for like rental properties, sometimes it's easier to go A and scale up than it is to be scaling up on the B side, right? So the A lenders will let you refinance a lot easier. B lenders want you to refinance after 1 year. B lenders, a lot of them are only okay with like 4 or 5 properties. A lenders will let you get to like 7, 8, 9 properties sometimes, right? So a lot of different nuances within the A and the B space. Private lenders are basically, can be individuals or institutional money that are lending capital based on the equity and the asset value and the security of the asset rather than the individual, right? So private lenders, ultimately their main concern is we just don't want to lose money, right? We're going to take on a little bit more risk, but hopefully it's secured by additional equity within the asset as well, right? Within private lending, that's a whole other like kind of category of topics that we can kind of talk about. There's a lot of predatory lenders out there that really just don't give a shit about the individual. They don't really care about what the plan is to pay you back. They just really want the asset, and they will actually make a move on the asset, knowing that you will at some point default, right? Because if someone defaults, you actually make a shit ton of money.
How common is that?
How common is that?
Like in
honestly, with my clientele, we almost never deal with it.
Yeah,
right?
You don't deal with lenders like that, right?
Yeah, I definitely don't deal with lenders like that. But we also, a lot of my clientele are investors, right? So with an investor, as long as there's equity in the buy, when you buy a piece of real estate, right, then you'd have to be crazy to default. Just put it up for a fire sale, right? Like just let it go, right? So I lend myself. I have lenders that will lend with me, and then I have mixed that will lend as well directly, right? But I always look at a deal as if, okay, if I'm going to lend on this, what kind of interest rate do I need? What kind of lender fees do I need to justify the level of risk associated with this? And then the main concern is how much equity is there in the property, and is that sufficient, right? Because if an individual defaults, I'm basically just going to take ownership of the asset. I'm going to fire sale it off. You still have to give the individual the remainder of the proceeds after you've charged all your discharge fees and your default fees and your accrued interest and compounding and whatever, right? All that kind of stuff. I wouldn't say it's too common, therefore, within the investor network. It might be more common in the times to come, right? It's really tough to say for sure. But so far, it hasn't been too common, right? I think the predatory side of private lending is when you have like no real exit plan, right? So usually what I tell people that are my clients that are within the B space, I basically say, you're either going to end up in the A space or you're going to end up in the private space, right? And we got to figure this out to get you on the A side to prevent you from going to the private side. And then once you're in the private side, you have a certain type of clientele that honestly I don't really have, which I'm grateful for, right? But like you have a type of clientele that will just keep going from private mortgage to private mortgage to private mortgage to private mortgage. So they just keep accruing fees, and they'll just kind of take the interest and put it into the mortgage, right? And it's just a recipe for disaster. And there are certain lenders that know that and will lend on the property as long as the asset value is good, knowing that they might be the last lender that gets to take ownership of the house as well, right? So private lending can be scary. Ultimately, you just got to look at how much money am I making and does it support private money, right? So we bought a cottage in Minden, Ontario. That was a deal that we got on Friday, which you get it for. I think we got it for $360, right? And it's not waterfront, but it's about, I think, 1 or 2 acres of land and like a 3,200 or 3,600 square foot house, right? Now, the story behind the house is the seller's ex-wife lives in the house and won't let an appraiser or won't let anyone in the house, right? So we somehow managed to get a few pictures, right? But she's kind of crazy and she just won't let us in the house. But ultimately, we're getting it vacant. So
was it like a hoarder house or?
No, it needs renovations, but it's not a hoarder house. She just won't let anyone in the house. She's pissed. She's pissed at her ex-husband. And she's like, I don't give a fuck. You're not selling this house, right? But he's like, no, I'm selling the house, right? But the problem is she won't let anyone in, right? So the result is you can't get an appraiser to get into the house. I have no idea what the condition is on the house, but the property value is at least $500,000.
Yeah.
And we bought it for $360.
Yeah.
Right.
Yeah.
So from that perspective, that requires a private lender. That's the only way to finance it, or you got to finance it all cash, right? So we're raising about 300 on that at about like 12%, right? So whoever lends us the capital is going to look at that property and go, hey, it's in Minden, which is less liquid, right? Because that's cottage country.
Yeah, yeah.
And they got to be able to look at the market and do their own research on property values, right? But if you look at the property value and you go, worst case it's 450, right? I'm giving a $300K loan on a property that's worth about 450, which puts you at about 70 to 75% loan to value, right? So it's pretty low loan to value, right? And I'm getting a 12% rate of return on a first position mortgage, which is a pretty solid rate of return for a first position mortgage. So they got to look at all that stuff. And then they got to ask, what's the exit plan, right? Like, are you going to flip this, right? Because if you're trying to flip in the current market, it's a little bit risky.
Yeah.
I won't qualify now, right? But like, I got a partner on this property that will qualify in the bank side for financing, right? And so the exit plan is to refinance into conventional money, right? So you can use private money like that. And I'm happy to pay someone $3,000 a month because I bought that property for $360 and the property value is at least $450, probably $500, right? And after we renovate this thing, it's going to be worth about $600 to $700 at least, right? So for me, like, $3,000 a month for like 4 or 5 months.
Yeah, it's not bad. Yeah,
costs like 12 to 15 grand, and I get to keep the house. Is dope.
Yeah.
Right. So that's the private money world, man.
I also know that certain lenders, I'm not sure if all lenders can do it, but I know certain lenders, you can actually finance the construction loan with the purchase of the house, right? Because if the house makes sense, certain lenders, I believe, like they'll actually like front you the renovation costs for certain projects, right? Is that correct? Or
I think what you're talking about is a purchase plus improvements.
Yes.
Right.
Yes.
So yeah, that's definitely possible. The problem or the downside is a lot of the times you're kind of looking at about 40 to 50K in the plus improvements part.
So it's just like lipstick, like cosmetic.
Yeah, it's not meant to be like a full like conversion or something like that, right? But like you buy a house, you want to replace the kitchen, you want to replace the flooring, it works perfect. The clientele that it makes the most sense for is not investors usually, right? It's a end user, first time home buyer, someone that's gonna move into this house, or they're buying it with like 10% down, right? Because then your burn strategy is really messed up, right? So you can't really burr with 10% down. You really have to put 20% down to burr, right? But if you're putting 10% down, then you're not going to burr anyways, but you want to do a little bit of cosmetic renovations to the property. The plus improvements makes a lot of sense at that point.
Okay. And do all banks offer this, or is this
most have some variation?
Yeah.
Right now, with the plus improvements part, the reason that it becomes interesting is when they pay and how they pay starts to change a little bit. Some want receipts. How many contractors give receipts? Not many, right? So that's where it gets a little bit interesting. Some will pay periodically, some will pay at the end, right? And the problem with them paying at the end is it means I got to front 40K worth of work and then get paid. Versus like, can I do like $2,000 and then get reimbursed and then do another $2,000 and then so on, right? So there's a couple like nuances like that. I'll say like everything is always negotiable and you can kind of like within reason you can negotiate some good certain terms, right?
I just want to talk about financial freedom, FIRE.
Yeah.
And then we'll kind of wrap,
wrap it up from there.
Yeah.
So how did you first discover FIRE, the FIRE community?
2018, unemployed, sitting at home.
Yeah.
Right. It all goes back to that pivotal moment for me.
Yeah.
And I think a lot of us, will have some variation of a pivotal moment, right? Like something happens that kind of pushes you into FIRE because like maybe you grew up with not much, right? Maybe you, I don't know, met some people that really kind of fell down in life, right? There's got to be something that leads people to FIRE because it's not what mainstream media kind of raises us for.
Yeah,
right?
they don't want you to know about FIRE for sure because there's no workforce.
Right? Exactly. So I say two things. I say the school system raises great employees.
Yeah.
And the media hates financially literate people.
Yeah.
right? Everything in the media is a scare tactic. So I almost go the opposite way of the media sometimes. Right now, all of the media, real estate's crashing, stocks market's crashing. I'm like, perfect.
Yeah.
So that means the average individual is scared of investing. So this is the time for us to kind of leap in, right?
What do they say? Be fearful when other people are.
Warren Buffett, right?
Yes.
You just gotta look at the media headlines and you'll know what everyone's thinking.
Yeah,
right?
And then you do the opposite.
Yeah. And when the media was saying, oh, real estate prices are going up like 20%, 30%, whatever, I'm like, this is stupid, right? Now everyone knows about real estate, and everyone was fucking talking about real estate and stocks.
Yeah.
My dad did not invest.
Yeah.
Guy started investing in 2020.
Yeah.
I'm like, Dad,
Into stock market or like the
stock market.
Okay.
Yeah.
He doesn't want any real estate.
Yeah.
And my dad's like 67, 68. He's a pretty chill guy. Even if he listens to this, I think he'll be fine, right?
Yeah.
But he did not invest his entire life, right?
Yeah.
And then in 2020, he decided to start investing at the age of 67.
Yeah.
I'm like, maybe you guys, this is not like probably not the right move for you guys at the current age that you're at, right?
Yeah.
But I mean, he made money like everyone else did, right?
Yeah.
And that was an indicator, right? Like everyone made money in certain things, right?
That's when we got into stock market.
Yeah. So I mean, going back to FIRE and financial independence, I think there's various stages to it, right? I think I'm not a frugal guy. Like I don't even want to like.
Yeah, we're not either.
Fuck that.
Pulled up in an Audi S5.
yeah.
I think you guys both pulled up in Teslas, right? Was that
No, that's not us. That's not us. We're the Honda.
We're the Hondas.
Oh, you guys are the Hondas?
Yeah,
Oh, shit. I think you guys are Teslas. Okay, whatever.
Yeah.
But none of that base model shit though, you know?
But I mean, I was never a frugal guy. Like my biggest kryptonite is actually just food. Right, like I fucking spend so much money on food, it's ridiculous, right?
Yeah.
I love my food. But anyways, like growing up, it was we didn't have much. Like my parents never really gave me like a huge budget or like I never had Nike shoes until I was in like fucking university or something like that, right? Like it was always like
I don't even own Jordans.
Yeah, I still don't know. I still don't know,
yeah.
Right? But I think I mean it's not like we like struggle to eat or something, right? But the result is like you want those like flashy things.
You want that luxury shit, you know?
Right? You want the luxury shit, right? So you get to university, working co-op. That's where like all my money would just go to like food, like booze, and like just like living like a normal life. It's not like I was buying like Gucci and like doing stupid shit like that, right? But it's just like a little bit more luxury than like you're used to, right? And so with me and my friends, like we don't spend money on stupid shit, but we spend money on stuff we enjoy.
Yeah, of course. You have to, like, so, especially in your 20s or 30s, bro. You have to, like,
and that's the same thing I told my parents as well. I'm like, look, like I'm not gonna enjoy like a Mercedes when I'm 50 years old. Yeah, it's just reality.
You still would, but like it wouldn't be the same.
Yeah, you might. Yeah, you probably will. But honestly, at that point, it's probably your kids that are enjoying the Mercedes more than you. Right?
Yeah.
So anyways, so going back to this concept of FIRE, or I learned about FIRE in 2018, I had kind of been doing it without realizing it. And what I mean by that is like while I spent money on stupid shit, I looked at the big check item, right? Which was like rent, right? So we worked 80-hour work weeks, which means you're coming home at like 12 a.m., 1 a.m. I'd be walking my ass from downtown to the Go bus and then hopping back to Unionville and then driving over to my parents' house again. My mom picked me up at that time, right?
Yeah.
So I focused on the big ticket items. I had a car in university, which I kind of negotiated out of a bet with my dad. He said I wouldn't get into a big four firm, and I was like, no, if I get in, you got to buy me a car, and then I bought me like a $6,000 car, right?
Yeah.
But in
Did you say 6,000 or 60,000?
6,000.
Okay.
Not much. It was he's kind of just getting by in his agreement, right? So
it was a method of transportation.
But it was so coupe. I mean, I made sure it was a coupe and it was a nice little car.
Okay,
and in university, honestly,
what car was it?
It was a Nissan Altima coupe.
Okay.
So it's just like it's just enough. Honestly, having a car in university is enough.
Yeah,
right? You don't need to fucking have a nice car. You just have a car. It's cool, right? So anyways, but I graduated in 2015 and I had, I think, $7,000 or $8,000 of OSAP debt, I think, at that point. And then I actually just sold the car for $4,000 and I paid off a period of a piece of the OSAP, and then I had a little bit of cash from signing bonus that I paid off the rest, right? There was various stages of FIRE. I think early on it was more so how do I kind of remove the large expenses from my life, right? Remove the car, therefore I didn't have car insurance, didn't have gas, didn't have car payment, lived at home with my parents, which allowed me to ultimately pay for the pre-con, stuff like that, right? Right before I got married, after I went back to work after getting laid off, I got a Mercedes, because that was kind of my treat myself moment for going through the stupid shit that I went through.
Which one?
It was a C300 coupe. Again.
Okay. You like the coupes, eh?
Well, I was like, you know what? This might be my last opportunity to drive a coupe before I'm married, right? So I'm like, I'm going to get a coupe, right? Because you can only drive it when you can drive it, right?
That's true.
And then that was about like $700 a month or something like that, monthly payment that I was doing. And then in 2021, August, I paid some guy like $4,000 to take over the lease on that car.
Oh, so that was a lease.
Yeah, it was a lease.
Yeah,
and I knew I was going to leave my job. And I'm like, what's like the last like bill that I have? Because I told you guys how we structure our finances. My wife kind of paid for all of that stuff.
Yeah.
Right. So the only real bill I had was this car payment. I'm like, shit. So this is the only thing that's really holding me up. Other than that, I need $0, maybe like $500 a month for food.
Yeah.
Right. There's not much. Right. So I
So
paid
you
some
got
guy.
fuck it, right?
I paid some guy. And this was in the middle of COVID, when just before the boom. Maybe it was 2020 August. I don't know what it was. But whatever.
Yeah.
Just before the boom of car prices, I paid some guy $4,000 to take over the lease. When if I just waited 6 more months, someone would have paid me.
Who paid you $4,000?
Right?
Yeah.
But whatever, got rid of the car, right?
Yeah.
And I think that was another stage of FIRE where like I had to get super lean, right, and kind of remove all like monthly obligations from my plate, right?
You just kind of pivoted towards the time.
Yeah.
Whatever called, right?
Yeah, exactly, right. And then once you've like built up like multiple like income streams, multiple portfolios, once you've done your investing, FIRE doesn't have to be forever, but the mentality kind of stays with you, right? It's just in theory, just investing your money to get a higher rate of return and living well within the means of your investment portfolio, right? It doesn't have to be forever, right? And I think as long as you have a solid investment base, then if you have another business that's generating good cash flow, you can kind of live off that as well if you want, right? But I've kind of tethered in and out of FIRE. Like I wouldn't say I'm like a FIRE guy, but
like I remember when I discovered FIRE, I was like, what? Like I never have to work again, right? But now it's like, yo, like I would always want to be operating some sort of business.
Yeah,
exactly.
Because otherwise, it's like, what's the point?
That's part of the conversation I have with people. I'm like, you think like you worked like a 9-to-5 job, and then you did like a side hustle, like real estate investing or stocks or whatever you did, or you created some sort of a business on the side, and now you think you're gonna leave your day job and you're gonna do nothing?
Yeah,
you're gonna get bored.
The result is if you're working 9-to-5 and you're investing and you're hustling, you're grinding.
Yeah,
you're working like 120 hour work weeks. All you want to do is just work a normal 40-hour work week again.
Yeah.
Right. So
I mean, it's retiring from the 9-to-5,
yeah,
but not retiring from working, right?
That's
you don't want to be retiring from
that's
working.
That's what it is. I think that's a modern way of it, right?
Yeah.
I think the entire notion of like retiring your day job is kind of boring. Like, what would you really do with your life?
Yeah.
And it's not even like your friends are all like sitting at home with you.
Yeah.
Right?
Yeah.
You're just like,
your friends are still like at 9-to-5. Yeah.
So you're just gonna find something that you actually enjoy doing.
Yeah.
Right. And you're gonna make
do
money
more
from
meaningful
that.
work and stuff.
Yeah.
Right?
But financial freedom is like super important though, right?
It
like,
is.
That's
it's
the
super
thing.
important.
That's the main thing, right?
But I think when people think about financial freedom, they're like, okay, I have to replace 100% of my income.
Yeah.
Which is not the case.
Yeah.
Right, like there's taxes that come into play, which is a whole other conversation, right? There's also the fact that you're gonna make some sort of income when you leave your day job.
Yeah.
Right, so you don't need to replace it 1-to-1. You also have no expenses. Like when I left my day job, I haven't bought a single suit since then. I don't like dress shoes. Like I'm still wearing the same dress shoes that I did for my corporate job back then. Because like you just don't have no transportation costs. You're fucking sitting at home and working, right?
Yeah.
So there's a couple things like that you just don't need the same level of like expenses and stuff like that. So I think some people when they think about FIRE, they think they have to replace their full income. Not really the case. So.
Okay, so in your opinion, you already answered this, but in your opinion, like how do you build wealth?
You invest little by little, and then you add fuel to the fire on whatever strategy worked for you. Right, so you stack little by little by little, and then you continue to stack using other people's kind of leverage, other people's resources, right, to then add fuel to whatever strategy you've mastered.
Okay. And then ownership, obviously, right? Like you said,
you gotta own it. Yeah, you gotta own everything.
You need to own something.
You gotta. Ownership is the name of the game, right? Which is why, like, I think on this podcast, I'm sure like majority of the people that you guys will bring in or have brought on must be some variation of an entrepreneur. Right. Like even if you were a doctor you can take two doctors. One that worked in a hospital the entire life and one that had their own clinic. You will probably notice a substantial difference.
Exactly.
Right? So entrepreneurship is a backbone to society, I think. Right.
So what's next for Mayu?
That's a really good question. I'm actually just adding fuel back on the fire. I think 2021 was a major focus on. So I'd acquired my multifamily in 2021, which you already talked about, right? But a big focus on the mortgage business, and I've now like hired an individual on that team, right? So it's allowing me to kind of free up a lot more time to continue work. What I want to do in the mortgage business is I want to have the initial phone call with individuals. I want to keep talking to the individuals. I don't want to deal with the back end kind of paperwork. Right. So that's my team, right? So that's kind of taking care of real estate investing, getting back into that. Look into the U.S. on the investing side, part of a group that's investing down there as well.
Which parts in the States?
I don't want to talk about it yet.
Oh, shit. Okay. Off camera. Yeah.
Off camera for sure. But the part of a group there, we're very early stages as to what we're looking into. But the real estate investing, even within Ontario, I think huge potential. I think now is the fucking time, right? And I've been aggressively making offers.
In the States?
No, Ontario too, man.
Ontario too.
The States is actually probably not going to be the time to buy until like 6 months from now. The States is almost a lagged market right now. It's kind of weird.
Why do you think that? Why do you
interest
say
rates, I feel like the impact of interest rates are being felt a little bit late there, right? So the market hasn't been as reactionary versus in Ontario, you had crazy high expensive markets that have dropped substantially. Ontario and BC, obviously.
Certain markets in the States are still hot.
Exactly.
Yeah.
Same with Ontario though. You look at Ontario, certain markets in Ontario have not. Yeah. Like, it's sad. Sometimes we almost follow the Toronto market as the market.
Yeah.
As the only market, right?
Yeah.
And the Toronto market has dropped a lot.
Yeah.
Which is great. If anyone had the balls to go buy real estate, they should. Right. The problem is a lot of people are just looking at this and going, it's not done plateauing. Like, we're like. The other day, I offered $775K for a detached bungalow in Scarborough, which I think
that was like unheard of like 6 months ago.
Which is very similar to 2019 prices to me.
Yeah.
Right?
Yeah.
Which is crazy. When does an asset go back in time?
Yeah.
Right. Yeah. So, definitely a huge buying opportunity right now in Ontario.
Obviously, the banks are increasing their interest rates and stuff right now, right? So obviously it's affecting the price of the houses, right? So I know a lot of people, they don't really understand how the interest rate correlates to the price of the asset. Can you kind of explain how that kind of works itself out?
Yeah. So here,
in the most simplified
the simplest way to understand this is with the rule of thumb, as most things in life, right? So a 1% increase in interest rates is usually corresponding to a 10% decrease in affordability, not home prices, but affordability. Right? So the result is you should have a corresponding decrease in home prices. Now, just because there's a decrease in affordability doesn't always mean there's a decrease in home prices. It might be like affordability goes down 10%, home prices go down like 7 or 8%, right? But that's kind of the ballpark. 1% increase in interest rates, 10% decrease in affordability, whatever kind of corresponding decrease in home prices, which is going to be impacted by demand and supply, right? So that's kind of the rule of thumb. In terms of how it impacts the average homeowner, the biggest impact is going to be on mortgage payment, which is how affordability is kind of determined, right? For an investor, it's kind of impacting them. Once again, the mortgage payment, which is directly correlated to then what kind of revenue does it generate. The current market that we're in, I'd argue, is in a very interesting one because while our mortgage payments are going up, the rent is also going up, right? So that I think is why you're not seeing as big of a drop, because I think in theory we should be talking about 25 to 30, 35% drop in real estate prices, which is some markets you're seeing that, some markets you're not, right? And the reason I think you're not is because affordability in a market like Sudbury is not as tight as affordability is in a market like Pickering, which is where I live, right? So when affordability is not that vital, it doesn't always mean that a 1% increase in interest rates, even though it should result in a 10% decrease in affordability or qualifying or something like that, it doesn't always result in a 10% decrease in prices, right? The other side is if rents are going up and you have a lot of investors in that market, then you kind of almost, it's not perfectly offsetting, like that's for sure it's not, right? But it is offsetting to a certain extent, right?
So are you saying that the interest rate increase isn't going to necessarily correct the market as much as it should, or?
I mean, if they keep going, right? Like
eventually,
it's 100%, but it's not following that rule of thumb, right? Where a 1% hike should decrease home prices by 10%. Yeah. It's not. It's probably a 1% hike is decreasing at like 7 or 8%.
What are you predicting to? What do you think is going to happen to the market over the next 6 months?
Who the fuck knows, right? I think I honestly don't know. I think anyone that says they know is kind of full of it.
What do you think?
If my expectation is we might actually continue to see a drop, right? But that doesn't mean that I'm not buying real estate.
Right? You're essentially like dollar cost averaging, right?
Kind of. Yeah. It's kind of fucked up to say, but yeah. No, I'd say what we're doing is just buying under market value, right? And buying strategic properties where the key in real estate is take your money out fast, right? As long as you can take your money out, I do not care about my asset value. Like my entire portfolio, I just don't care. It's just there, right? I've already taken my capital out. It's already paying down the debt over time. Yeah. Your mortgages get paid down about 3% per year. Yeah. Which over the period of a 5-year mortgage term would be 15% paid off from your mortgage.
Tenant's paying for it too.
Yeah.
Yeah.
Right? Yeah. So as long as you buy cash flowing properties where you don't need to sell them for 5 years, that's the key.
I know with mortgages, I know they increase the interest rates. I know either your monthly payment can go up, or you can choose to keep the same monthly payment and just increase the amortization period, right?
Yeah. So
as an investor, would you recommend keeping the fixed costs and just increasing the amortization period since you're not really making the monthly payments?
There's pros and cons to each approach, I think. It's not that you can choose. It's different lenders offer different types of variable rate mortgages. So some offer an adjustable rate mortgage. Some will offer it where you have a static mortgage payment where even though your interest is changing, your payment is not. The pros and cons of each is the ones that have the adjustable rate mortgage, you at least know you're good for 5 years. Like you don't have to, don't worry about it, right? Your payment will go up. It sucks. Your payment will also go down. Right? It's great when it goes down, right?
Yeah.
But at least you don't have to worry about it for 5 years. The guys that have the static rate mortgage, what we're starting to see right now is there's something called the trigger rate in your mortgages. I'm sure you guys have heard of this stuff, right? Trigger rates, trigger points, right? So probably a lot of people that had a mortgage pre-March of 2022, right? So before March of this year, before we really started these hikes coming into place, a lot of them have hit the trigger rate effective September, the rate hike that just happened, right? It was, depending on when this episode releases, right? There's a September rate hike, which now should put a lot of people meeting their trigger rate, right? Then there's this concept of a trigger point, right? Which is you can meet your trigger rate and be perfectly fine. You have 3 courses of actions. One is you can increase your monthly mortgage payment. You can switch it into a fixed rate mortgage. You can make a prepayment as well, right? Or you can just choose to do nothing, and that's perfectly fine, right? And you can continue to be in negative amortization, which is where your monthly mortgage payment does not cover your interest expense on your mortgage debt, right? And you'll be in negative amortization. What's happening to that interest is not like it disappears. It just gets added to your principal amount of your loan that's outstanding, right? And you're fine until you hit the trigger point, which for most people is once you get back to 80% loan to value or whatever that original principal was on your mortgage. So if you bought a house in February of 2022, you're probably the most susceptible to hitting that trigger point because you haven't had much time for your mortgage to get paid off. Versus if you bought a house in, call it June of 2020, your mortgage has at least been paid off for 2 years. So you have probably another 1 or 2 years to get back to that amount, right? So once you hit that trigger point is where they're going to either force you to switch into a fixed rate mortgage, or they're going to force you to bump up your mortgage payments, right? Or they're just going to say you got to pay off the entire mortgage, which really just means you got to refinance, right? Take the mortgage somewhere else.
Okay.
So, yeah, we'll see. But at the same time, I also think the banks are a for-profit entity. In their best interest, they do not want a default. And they sure as hell do not want mass defaults.
Yeah.
Which would be
collapse
a fucking shit show, right?
Yeah.
So I think as long as you believe, and this is the same argument I make for variable versus fixed, right? As long as you believe the banks are a for-profit entity, they will protect their own ass. And as a result of having to protect their own ass, they will protect us as a result of having, numbers in this entire game, right? So we'll see what happens. But, yeah.
Okay.
Hopefully that answers that.
Yeah, you did.
All right. One piece of advice. I mean, you've given so much advice to the audience by now, but just to wrap it up, one piece of words of wisdom or anything to leave the audience with.
Yeah, wealth is definitely possible. I would say it's, you just got to keep hustling. You just got to keep grinding. You got to take action, right? I think that's the biggest thing. You guys can all listen to as many podcasts, as many YouTubes, do whatever you want, read as many books as you want. It's great. But if you don't take action, nothing's going to happen, right? So if I'd have to leave anyone with any advice, just get out there and take action.
All right. Where can people find you?
Yeah, Instagram, Mayu.Thava. So Mayu.Thava is probably the best way to get in touch with me.
Yeah, all that's going to be down below in the description. If you guys enjoyed the show, make sure you guys like it as well. Share it as well to the person that you think would, mutually benefit this episode. And make sure you guys subscribe to the podcast as well. We're on all platforms at Spotify, Apple Podcasts. What else are we on? We're on TikTok, Instagram. All the golden nuggets that he dropped is going to be compressed. It's going to be on our TikTok and Instagram page. All of that, once again, is down below. Also hit the bell notification button, because apparently if you don't do that, it won't give you the notification when we drop these videos. So yeah, guys. Until then, what is possible?
Wealth.
Wealth is possible. There we go. All right, guys. Take it easy. Thank you.